Okay, Sarah, we've been able to survey economists since that 8:30 upside PPI surprise to see how they changed their forecast for the Fed's preferred inflation gauge. The PCE comes out on February 29th. On average, the survey of 7 forecasters sees them boosting their outlook for core PCE by 1/10 to 0.4%. So it doesn't sound like much, but it is more than double the December rate. And then what you see what happens, here's a bunch of the estimates we have here. You can see up pretty much 0-1 across the board. Pantheon, Citi, Morgan Stanley, JP Morgan, same with Goldman Sachs and some of those you don't see here. The annualized 3-month rate, if these forecasts end up being right, would rise by a percentage point to 2.4, half a point for the 6-month. It would actually decline for the year-over-year rate because a bit bigger or a hotter January 23 number drops out. Anyway, it's going to give the Fed pause is the bottom line. And I want to show you a new chart we've never shown before. Sarah, what this does is it tells you the number of 25 basis point cuts now in the January 2025 contract. I don't know if that helps viewers envision where the market is, but you can see they were up as many as 7 cuts built in the middle of January. Now they're down to playing with 3 3/4, 25 basis point cuts there. Sarah?
Yeah, so they've come to the Fed. They've come to the dot plot, the market, basically.
Exactly.
For the
There's just a little bit of a gap between of 3/4 of 1/4 point, essentially.
What do you make of the argument that the economy is potentially overheating again? I mean, I know it's preliminary, strong word. We don't want to say it too much, but just some of these data points adding up with a stronger economy after the January payrolls number.
Yeah. I'm seeing a lot of commentary, Sarah, about this idea that there's these one-time increases that happen in January that are not seasonally adjusted. Things like outpatient hospital services, a bunch of things that were in there. I am wary of the idea that it could be overheating. I think you need to take it into account, but I wouldn't necessarily prejudge it. If this is really a one-time January effect, it should work its way out by February, perhaps by March. And so you could still be on pace for a summertime rate cut. Maybe it's fall now, but you could still be on pace if you get March, April, and May come back into the line after some of these one-time price increases.
Yeah, January's funky. I mean, even you could say the same thing with the retail sales, and we wonder if the consumer's slowing more than expected because of weather and holiday and all that stuff.
Right. You don't want to go too far into the weeds, but when you're fishing, Sarah, sometimes that's where the fish are, in the weeds. So you got to go in there. And we know that there's stuff in there. Like, for example, the BLS said it today. They don't adjust for outpatient health services. But Reedy and Shepardson, he says there's a seasonality to it. So don't want to get too detailed on this thing. It's one you take under advisement. Don't panic. Watch it. If it keeps going, well, then you got to be worried.